Yo, hello, hello. All right. Welcome to June 24th, 2024. This is going to be a market trade recap for Monday, and let's get right into it. All right. So coming into this morning, I noticed that we took out the higher time frame objective that I had marked out. That my weekly objective for this week was previous week's low, and we took previous week's low during the excuse me. We took out previous week's low during I wouldn't say pre-market, but we took it out during the um 9 a.m. So I wasn't, I wasn't trading at the time. So when I noticed that we took out previous week's low and previous day's low, I went back into my trade plan for this week. And here, like I said, after we take out objective is previous week's low. After that, I would only trade lower time frame models. So come into the morning after I noticed that we took out previous week's low, I started to only look for lower time frame models, like I stated, like the hourly time frame, 4 hour, 15 minute. And the trades that I took today were actually based off of the 5 minute, which um, I I don't know. I was pretty confident that the 5 minute was going to be a um, mm, was gonna be like the plan, but I don't know. I might change my plans so where I won't trade 5 minute power of three just because it's such a low time frame. But here I can go over it right here. So the trades that I did end up taking was I noticed how we had displacement on the 5 minute time frame right here, and we closed above a 5 minute SIBI. We created our own little 5 minute BISI as well. So the reason why I traded the 5 minute um, power of three is because I wanted to see how prices would react at that 5 minute fair value gap, and the 15 minute power of three was gonna allow me to take an entry. So I went onto the 5 minute power of three, and I noticed this candle right here. So I wanted to see some sort of reaction away from the 5 minute FEG. So this candle right here, we came into it and we displaced away, and I marked out this candle's high and this candle's low. So I'm thinking to myself, okay, we just came off of a 5 minute fair value gap. We closed above a 5 minute SIBI that we should now treat as inversion. So I go on to the lower time frames to target that 5 minute high, and I'm sorry. So I go on to the 1 minute, and I notice how when we displaced away from this, or when we priced higher away from this 5 minute fair value gap on the 5 minute time frame, I go on to the 1 minute time frame, and I notice how we have a creation of a fair value gap as well, a 1 minute fair value gap. So I take my entries right here. My stop loss was at the fair value gap low, and I was basically just targeting this 5 minute high, and I would have moved my stop loss to break even, and I would have been targeting this high and maybe these highs here. So my first trade, I did end up getting stopped out by actually 75. So I got stopped out by about point 0.5 of a, 0.5. I got stopped out. I got wicked out actually, which is completely fine because um, I allowed myself two entries per trade idea. So we never actually got a closure below this 1 minute fair value gap. And once again, once we closed above this 1 minute FEG, and we left this 5 minute high intact. So this is the 5 minute high right here. So once we close back above this 1 minute FEG, and and left this 5 minute high intact. I took another entry. So once prices dips back into this FEG again right here on this candle, I took my entry right here actually, and I was targeting again 5 minute highs. And then once we took out this 5 minute high, I moved my my stop loss to break even, and this is what happened. So I took a partial right here, one partial here, and then once we broke above this high once more, I noticed how we were consolidating. This is pretty poor price action. So, I did move my another PT at this high, swing high, just because of how consolidative we are. We took out the higher time frame objective, and we just kind of started bouncing really back and forth. So my initial terminus was this high, but after I noticed how we were kind of consolidating, terminus moved. I moved my terminus here, and I took another partial at here, at this swing high, on the 1 minute time frame. So I did end up losing about maybe 200 today in total, but that is because I followed my trade plan. My first initial trade, I had 5 contracts on, and I took a 5 contract loss. And in my second trade, I only allowed myself 3 contracts, so I reduced the position sizing, and so I take less of a I guess I reduced the risk myself, and I lessened the damage that I would take, because not every trade is guaranteed. So those were the 2 trades that I did end up taking, and after those 2 trades, I kind of just left the screens, and I left go to the gym. But looking back at it now, back testing after I got home, I did notice that there were two setups that did plan out. Or if I were at the screens, I for sure would have taken these, just because they followed my trade idea. So like I said, we kind of consolidated basically this entire hour here, this entire 11 to 12 hour, and then during lunch, we started getting some movement down. So during the 11 a.m. Hour, we kind of consolidated, and then right at 12 we started displacing lower, and this would have been the trade that I take right here. So notice how this 15-minute candle closed, right? We had a pretty bearish closure, and on the 1 minute time frame, it looks like we just kind of drifted lower. But if you look on the 5 minute time frame on NQ, we created a 5 minute SIBI right here. So we are starting to create fair value gaps, and this move lower right here is we're pretty bearish. So coming into the 1 p.m. hour, I wanted to see if we can take out this 15-minute low right here. So looking at this 15-minute power of 3, are we most likely going to take out this 15-minute swing low or swing high? Just looking at this candle right here, this 15-minute candle, and just looking at this, we can tell that we can probably we are most likely going to take out this 15-minute low with this next 15-minute candle. So I'm gonna mark out the 15-minute open, 15. So we open right here, so that's our open. So notice how we are selling above open of the 15-minute candle. So like I said, we can apply that way of thinking throughout our trade ideas, trade plans or whatever. But so we are selling above the 13.15 open price level, and let me note that as the 115 power of 3. So, and on the lower time frames, do we have any supporting ideas that that support the idea of us taking out this 15-minute low? And we can tell we are now coming back into a 5-minute FEG, a 4-minute, 3-minute, 2 minute, and even a 1 minute. So with that in mind, we can take an entry, short entry at the 15-minute fair value gap. So we would have entered on this candle right here. Stop loss is going to be at that candle's open, and targets would have been at that 15-minute low. So actually, if we can go on to, like, you know, the lower time frames, if we can, you know, define the risk a little bit more, I would probably be on the 3 minute here, just so I can define that risk to this 3 minute swing high. And so now after that, we're in that trade, we're thinking, okay, after I take out, so after prices takes out this 15-minute swing low, you know, I would have moved my stop loss to break even here, and I would have looked for, you know, standard deviation projections of some sort or anything like that. So let's see if we can have any projections here. So notice how this standard deviation basically aligns with that 15-minute low. So I would have taken off, you know, another contract off of that 0.2 level right here, that standard deviation of 2, and maybe even -2. So we would have gotten, I take off, you know, 2 partials here, another 2 partials at that -2, and then prices would have reversed and, you know, stopped me out at break even. So after seeing that trade, that was the second trade that I would have taken. But like I said, I was at the gym, so I wasn't on the computer, and I wasn't really paying attention to anything that was on the charts. And after, you know, just continue lower. At this time right here, after 1:30 p.m., I stopped trading, and I wait till the 2 p.m. open. So I'm gonna mark out the 2 p.m. open here. 2 p.m. open is right here. Are we recording? Yeah. So 4-hour open. And we're just kind of now, like, we're just basically just drifting lower and lower and lower. Even on this 15-minute power of 3 here, we would have been able to catch, actually. No, never mind. We wouldn't have been able to catch anything here. Because we open here, we take out that low, come back to this. Yeah, no, we wouldn't have to. Okay, so like I said, after we exit that trade, we're just kind of like slowly drifting lower and lower, and we left this sell side in play. And we kind of like displaced back into the range. On the you might not be able to see it on the 1 minute time frame, but on the 5 minute time frame, you can for sure see the displacement. We closed above a 15-minute fair value gap on the 15-minute time frame. We create 5 minutes 5 minute fair value gap, so displacement on the 5 minute time frame. And this would have been the third trade idea that I would have had for today. So at right here at 3 p.m. just looking at how this hourly candle closed right here. This is the hourly candle right here. This hourly candle, what can we anticipate for prices to do? Take out this hourly high or take out this hourly swing low? Just looking at that, we can anticipate for prices to take out that hourly high. And in confluence with that, what are we anticipating for prices to do on this 15-minute 15-minute candle? Take out this 15-minute high or this 15-minute low? This 15-minute high or this 15-minute low? Just looking at based off of that, we can anticipate for us to take out the 15-minute high. And going on to the lower time frames of the 15 and the 1 hour time frame, we would go on to the 5-minute time frame to find any supporting trade structure that supports the idea of us taking out that swing high. So after noticing that we are going to take out that 15-minute swing high, we would have taken our entry on the 5-minute time frame, had a entry at that 5-minute fair value gap, and notice how I wouldn't have gotten into this trade until this candle's wick inside it, because I'm waiting for my candle closure. Even like here, we're like wicking. We already basically, some people would have entered here at 14:55, but my entry would have been at 15 basically 3 p.m. And that is because I wait for candle closures. I'm not gonna enter when the 15-minute candle hasn't closed yet, and 15-minute closures are usually on the 15, 30, 45, and 00 time window. And once we dip back into this 5-minute FEG, our targets are, our first initial target is this 15-minute high / 1 hour high, and then we can have partials come off here at that swing high. So that would have been another about 4 points, 4 ticks on NQ, and then stop loss, like I said, to break even. And overall today is a kind of interesting day. During the morning session, for sure, I got chopped up here, but I followed my trade idea. I allowed my trade idea to have two entries, and then like I said, I turned off the streams at basically at 11 or 12 p.m. EST, and then I left to go to the gym. But after looking back at it now, there were 2 trades that just high probable trades is what I would call these trades. So there we go. Stop loss would probably not this fit. Yeah. That swing low, basically 799. 799. Yeah, right there. That would have been our stop loss right there. Okay, and I do want to talk to you guys about what I do have in mind for prices tomorrow on Tuesday. So just looking at the economic calendar, we do have consumer confidence on Tuesday, so or tomorrow, which is a red phone news, so we can expect more volatility today. And like I said, we are trading inside a inside a weekly FEG. So until we can see displacement away from that FEG on maybe the 4-hour time frame or daily time frame, then I will continue to look for shorts. So coming into for tomorrow, I am anticipating for us to run out previous day low. So I'm gonna have previous day low as my draw liquidity, my higher time frame draw, and this sell side level I marked right here. So I'm not anticipating for prices to retrace all the way back into this previous day high. So like I said, previous day low and this sell side level are my targets for coming in tomorrow. We might take out this low actually during London or Asia session or London session, which is completely fine. If we do take out that previous day low, then I would do the same thing I did today, which is going to be I would trade the lower time frame models, and if they don't allow any setups, then I don't take any trades. Is there anything else I do want to talk about? No, that's about it. So yeah, so coming in tomorrow, previous day low is the objective, alongside this sell side level that I do have marked out. If we do get displacement away from this weekly FEG, it could be on tomorrow or Wednesday, because those days tend to create the low of the week. But like I said, we are about to close on the monthly time frame here. This is the last week, so don't expect too much we can't expect, insane price action where prices would, do something like we open on daily time frame, take out this previous day low and this outside level, have SMTs with ES, displace higher, we come back inside it, and then take out previous week's high and make new all-time highs. What I am anticipating is some sort of like, we take out previous day low, sell side level, we kind of maybe consolidate or something like that, and then manipulation, and then a displacement move higher, but not to the point where we displace all the way back up to previous week's high, but maybe back inside, making a movement towards that previous week's high, which might end up being previous month's high if we make it through this trading week without taking out this previous week's high. And we could do something like that. I don't know, something like that. But yeah, that is gonna wrap up for today, June 24th, 2024, and I'll catch you guys later on the next trade breakdown. Peace out. Bam.